Good afternoon, everybody. Hello, this is David Perlmutter from Quantum Listing, and welcome to our webinar today on blockchain and real estate and why you need to know. And we are very excited to have Ken Rhinehart here with us to tell us all about it. Ken is a senior advisor with SVN and the regional chair for FIBREE, which is the Foundation for International Blockchain and Real Estate Expertise. Ken started in commercial real estate in 1992 as an appraiser before working for two different investment management companies and a syndicator before becoming a broker with SVN. So Ken is going to tell all of us dinosaurs who don't yet understand blockchain why we need to get up to speed so that we don't become extinct. So thank you, Ken, and welcome.
Thank you, David. I appreciate you, the introduction, and you're going to recognize something on one of my slides coming up. You'll probably get a chuckle out of it. But good morning, good afternoon, good evening to everybody wherever you may be. Thank you to Quantum Listing for hosting this presentation. Like Dave said, my name is Ken Rhinehart. He gave a little bit about my background. I'll go into it a little bit more because it kind of sets up why I'm interested in this topic. Some of you have put in the location where you're logging in from. If you can continue to do that, it's fascinating to me because real estate and blockchain really is a global phenomenon, and it's happening right now. I was recently, on a FIBREE webinar. I'll explain FIBREE in just a second, about blockchain and real estate, and the participants were literally from all over the world. I heard South Africa, Manila, Belgium, Rwanda, Italy, Switzerland, Los Angeles, Sweden, Nigeria, Saudi Arabia, and many more. I couldn't write them down fast enough. So I say this because as the title says, why you need to know. Well, the phenomenon of blockchain isn't just Silicon Valley or Silicon Beach here in California. This is a worldwide phenomenon. It's happening now, and I think it will fundamentally change the way real estate is transacted in the near future. Quick disclaimer, we're not providing any investment advice, so please do your own research and obtain professional advice before investing. So FIBREE stands for Foundation for International Blockchain and Real Estate Expertise. It's a young organization, only a few years old. It's truly a global organization dedicated to real estate and blockchain. I encourage you to go onto the FIBREE website, download the current industry report, and read up on that. There's a ton of information out there about real estate and blockchain. I'm going to cover a sliver of it today. So real quickly, we're going to cover what is blockchain. That's probably going to be the first half of the presentation because it really sets the stage for the rest of the presentation. And how will blockchain disrupt commercial real estate and single family? And most of my talk is geared towards the United States, but it is happening globally. How is blockchain being used in commercial real estate right now? What are the barriers to adoption, and what can I do to prepare? So why is, adjust my screen here a bit. Why is blockchain important? So no less than the MIT Sloan Management Review in 2018 said, blockchains promise to be as fundamental as the internet in shaping how future business will be conducted. That's a pretty hefty claim. So let's, whoops. Let's take a look at what is blockchain. If you search online, you'll find a definition similar to this one from Harvard Business Review. Blockchain is an open, distributed ledger that can record transactions between two parties efficiently and in a verifiable and permanent way. So when I started in commercial real estate, I started in 1992 as an appraiser, commercial appraiser. And we had a weekly subscription to the precursor to Comps, which was called precursor to CoStar, which was called Comps Inc. And we would receive pages of comps that we could slip into notebooks. In order to search for comps, we go through the pages of the appropriate notebook, whether it be retail, multifamily, industrial, whatever. And if we couldn't find what we're looking for, then we would have to go and search on one of these. This is a microfiche machine, and it was painful to try to search for comps using microfiche. So that's the past. What are we looking at today? Well, today, this is our situation. We pay a lot of money every month for information. This is this is us as brokers paying money to get information in order to do our job. I like what David Knowles has to say. David Knowles was one of the creators of the CMBS market. And he said the real estate industry is the largest capital market asset class in the world. It's over $220 trillion. Yet it's the most backward industry at the same time. Real estate is the only industry in the world where you make money by hiding information rather than disclosing it. He also stated the potential for real estate tokenization, and that's how you break up the ownership of real estate, and we're going to go into that in greater detail later. But the potential for tokenization is actually greater than the REIT market. So the REIT market has deficiencies that the tokenization of real estate can improve. So what's the solution? So why do people make money by hiding information? It really comes down to trust. Underlying all this is a trust issue. There will no longer be a need to trust because everything is going to be on the blockchain, and trust is built into the system. So all of this so far is a bit of groundwork to get to this point. So what is a blockchain? Simple definition: blockchains are distributed databases that a group of individuals control and that store and share information. Bottom line, blockchains create permanent records and histories of transactions that are nearly impossible to change. So just a quick warning, I'm not a computer guy. I use a computer as a tool. Just like most of us know how to drive a car, but we can't explain an internal combustion engine, how it works. I'm counting on computer programmers to know how blockchain works. Again, blockchains create permanent records and histories of transactions that are nearly impossible to change. So when data is recorded onto a blockchain, it's extremely difficult, or if not impossible, to change or remove it. So when someone wants to add a record to a blockchain, like transfer a title, also called a transaction or an entry, users in the network have to validate and verify the proposed transaction. A blockchain is a peer-to-peer system with no central authority managing data flow. Kind of like the old Napster or Pirate Bay, where you would swap copyrighted material illegally. But so cryptocurrency basically is the software paying the hardware to operate. The software is the blockchain protocol. This is kind of a depiction of a blockchain that I'm sure you've all heard of, Bitcoin. So Bitcoin is a blockchain, but not all blockchains are Bitcoin. There are literally hundreds of different blockchains out there serving different purposes. Bitcoin is both the name of the blockchain itself and the name of its currency. So let's look at three main characteristics of blockchain. One, and we covered this a little bit before, and we'll do it again, it's distributed. So it's a type of computer network that's spread out over different computers. Each computer has a full copy of the blockchain. It's immutable. Past transactions can't be changed. So you're probably already starting to see the value of how that will work in real estate. You'll be able to track chain of title effortlessly, and it's decentralized. There is no central authority. So let's look at three core elements of blockchain. One, I love pictures. You look at this, and this is obviously just a pictorial representation, but each block is a list of transactions recorded into this ledger system over a given period. The chain, and kind of looks like a paper clip there in between the blocks. The chain is a hash that links one block to another mathematically. So there's code written into each block as it's added, and these computers get together and they have to solve an equation in order to add a new block of information to this chain. And then also it is a network. Every computer on the network is considered a node, and each node contains a complete record of all the transactions that were ever recorded on that blockchain. So how does a blockchain work? This is from 101blockchains.com. Great resource for information about blockchain in general. So a user will make a request for a transaction, maybe change in title or something. Then a block representing that transaction is created. The block is broadcast out to all the nodes, all the computers on the network, and then all the nodes validate. Remember, we talked about the hash. They do these mathematical computations. They validate the block on the and the transaction. Then the block is added to the chain, and the transaction gets verified and executed. So that's a bird's eye view of how it works. So there are three types of blockchains. I'm not going to go into too much detail about it. Public blockchains like Bitcoin or Ethereum. There are private blockchains. I'll give an example of Walmart and how they're using a blockchain. Several years ago, you may have heard in the news how there was an E. coli outbreak in some of the produce they were selling. Well, it took several weeks to trace the origin of the produce back to the source. So that kind of spurred them on to create this private blockchain. And so now they will be able to know within literally seconds the source of every piece of produce that they sell, because as it moves along in the system, it's added to the blockchain, and it can't be changed, it can't be corrupted. And the other is a permission blockchain, which I'm still trying to get up to speed on what that is. So I'll punt on that one. So what are the benefits of a real estate blockchain? I think there are about 8 of them. There may be more. So security. I'm going to take a drink of water here real quick. Security. We talked about that a little bit earlier. So blockchain relies on this encryption to validate transactions by verifying the identities of parties involved in the transaction. We talked about the complex mathematical calculations known as a hash that's performed each time a transaction is added to the blockchain. Depends on the transaction data, the identities of parties involved in the transaction, and the result of previous transactions. So it's a very, very, very secure means of tracking information. It's transparent. Depending on the blockchain, everyone can get exactly the same information they need without having to hunt down people across different companies. It's efficient. It eliminates the need for manual reconciliation across multiple databases. So I did acquisition and disposition of retail shopping centers across the country, and one of the things I would do once get a property under contract is I would take the nice fancy brochure. This is back when I received actual brochures, offering memorandums. Take those, put them aside, and start digging into the information myself. Start reading the leases and seeing what's actually in the lease, because that's important. So instead of, if this information were on a blockchain, there would be no need for that, because all the lease information is in the blockchain. All the step increases, all the options, everything. So it makes the acquisition of a property far more efficient. It's decentralized, so again, you have many computers keeping copies of the blockchain. It's immutable. We talked about that. Liquidity. I'm going to touch on this because I think this is one of the huge factors. The ability to move in and out of assets is going to be what I think is going to be one of the big game changers. Transfer of wealth. Transfer of wealth can easily be written into what are called smart contracts. The smart contracts are self-executing contracts, so it basically will eliminate probate disputes. And dead capital. So dead capital is an economic term related to property which is informally held but not necessarily legally recognized. This leads to an uncertainty of ownership, and therefore it decreases the value of the asset and or the ability to sell. Now, that's not a problem here in the United States, but a lot of developing countries don't have a reliable and robust title system. So that creates a problem. So let's take a look at an old map of Latin America and how much dead capital is there. So, maybe the locals all know who owns the farm or the land, and they go, okay, yeah, they own the property from the tree over to the stream and up to the farmhouse. Well, that that doesn't make it a very secure investment. Banks aren't going to lend on it to improve the property. So it leads to what is called dead capital. I love old cars, and to me, this is a pictorial representation of dead capital. You got a lot of great assets that are underutilized and underdeveloped. So I see 6 factors converging to make this the future of real estate. One, you have blockchain itself. We talked about that. We have the phenomenon of crowdfunding, big data. There's a lot of data available now, and machine learning is going to be able to better able to search for and extract information. Maybe you're a contractor that's looking for properties with 25-year-old roofs and you know, a 15-year-old HVAC system. You'll be able to go into these databases and search for and find that little nugget. Everything's moving to the cloud. Obviously, blockchain is on the cloud, as well as the shared economy. So how will blockchain disrupt commercial real estate? I love this quote by Mark Andreessen, founder of Netscape. And if you don't know who Netscape is, then you're probably under 40. But software is eating the world. Boy, isn't that true? It's disrupting everything. So here's where we get into the nitty-gritty of how it's going to disrupt real estate. So you're going to have a much easier transfer of ownership. Whoops. So it's going to be much easier to transfer the ownership. You'll be able to transfer from one party to another without intermediaries. And so things will be much more liquid. So when the ownership of a property is put on a blockchain, it's called tokenization. So you, kind of like a REIT, but you'll, instead of a share, you'll have tokens, and those tokens represent value. So here's where it gets really interesting. Say a person has $500,000 locked up in equity in a property, and they have a huge medical bill, or they have an urgent need for a surgery. Today, if they need that $100,000 in order to get that surgery, they'll have to go through the lengthy process of either refinancing the property or selling the property, you know, in near fire sale conditions. So it's not beneficial. However, if the property were already tokenized, all they got to do is sell $100,000 worth of their value and liquidate just that little bit, and then they got the money, and they still have the rest of their money working for them. It's going to simplify fractional holding without the minimal constraints. So if you're familiar with syndication, a lot of times there are lockout periods, and you know, maybe the syndicator doesn't want to sell, and then you got to sell your fractional share at a discount. Alleviate tax inefficiencies. That's a benefit for the government, really. It's going to simplify cross-border transactions. A lot of funds come into the United States because we have a robust record-keeping system. It's going to even simplify that even more so. It's going to eliminate substantial overhead due to unnecessary middlemen, excuse me, brokers, agents. it's going to impact a lot of people, escrow agents, title companies. There's going to be a cost reduction, particularly in the mortgage process, because as you think about what a bank has to do to underwrite an asset. They got to do a lot of work. They got to do, like I said earlier, abstract leases and put together their own cash flows and so forth. So that's another benefit. Tokenizing property will allow real estate assets to be uniquely identified via a digital record that contains information regarding occupancy, physical characteristics, legal status, historical performance, and financial position. So like I said earlier, if the HVAC system was replaced, and you'll have that accurate information. If the roof was replaced, you'll have access to that information when you go to purchase the property, without having to go in and verify. And it's going to cut down the due diligence process tremendously. So 7 ways blockchain is currently disrupting real estate. Definitely in land titles. One case in Haiti where the 2016 hurricane destroyed so many records that land, even today, remains unallocated. You can't recreate these paper trails. The data collection and due diligence, like I just said, imagine all building data such as repair records or floor plans will be stored on a blockchain to make it easier for investors to do their due diligence and to verify property details. Investments. REITs are more liquid, but they don't have the diversification you may want as an investor. You'll be able to basically create your own diversified fund by allocating resources across property type and geography. Project management. Think of a project as a long list of transactions between parties. These transactions can represent any type of agreement concerning milestones achieved, payments, or goals. These project transactions can be coded into a series of smart contracts that would be automatically executed once the contract is fulfilled. Property purchases, like I said, cross-border transactions will be much easier. Financing, this is people are already working on financing blockchains. Property management and renting. So we've touched briefly on this, and imagine all the property records on an immutable or unchangeable database. It includes repairs, late paying tenants, etc. So let's look at a real world example of what I think has some of the most biggest potential. You think of a 1031 exchange where, real briefly, that's where an owner can exchange their equity in a property into another property by selling it. So right now, there's a 45-day identification period. And I mean, I get a couple of emails every week about, from brokers urgent saying, hey, my owner has, or my client has 5 days left to identify a property. Do you have anything that fits this criteria, etc.? And so it's a risky proposal for people to do 1031 exchanges. But if you think about it, if there were investment portals where they could easily exchange their funds into assets by buying tokens, fractional ownership of various assets, they could close on a property in the morning and have their funds invested later that day, or the next day. All they have to do is go onto an investment portal and say, okay, I can diversify by property type, risk level, geography. So instead of having it in all or nothing, I got to invest $500,000 in, and I'm going to have to take this asset, even though I'm not all that excited about it. You'll be able to diversify. You could buy a part of a shopping center in Seattle, an apartment building in Kansas City, and excuse me, maybe put a small sliver in a shopping center in Bolivia or something. Who knows? I'm sorry, my throat's getting a little sore, but real quick, smart contracts. We talked about those. Those are self-executing contracts. So how is blockchain being used in commercial real estate right now? Real quick, I threw this slide in here just to give you an idea. Some of the heavyweights that are already implementing blockchain in some fashion or another: Apple, Facebook, Google, Ford, Toyota, MetLife, Walmart, Samsung, UPS, FedEx. So the handwriting's there. It's on the wall. So currently, use of blockchains in real estate: the country of Georgia, not the state, the world's first country using blockchain to record land titles. Other countries are ramping up land title registry using blockchain. UK, Sweden, and Ukraine are currently testing applications to record transactions. China, good old China, is they're using blockchain integration for things like notarization and other real estate components. Arizona, there's a county in Arizona that's using that's starting to use RealBlock for their land title registry. The first tokenization of a real estate asset was done by Solid Block. The Aspen St. Regis, they raised $18 million. They had a one-year lockout period before investors could sell. A year later, their asset, their tokens increased by 30% value. Send me an email if you want the slide deck, or I'll be happy to send it to you. I put my email address in there. So
yeah, and Ken, we can include the slide deck in the follow-up email to everybody if you'd like.
Okay, great. What are the barriers to adoption? I believe there are two big ones: psychic and social. The technology is there. It's getting adoption. It's going to be slow, but I think once it starts picking up, it'll gain momentum. Getting people comfortable with the change and working out all the legal and financial difficulties that have come up and will come up. That's one aspect. And then there's what's called the Bitcoin barrier. People associate blockchain with sketchy and nefarious transactions. A lot of people think, well, Bitcoin, that's where you buy illicit drugs and hitmen. That's not the only use. U.S. barriers to adoption. There are hundreds and hundreds of counties in the country. So land title, I think, is going to be one of the hardest things to put on a blockchain. So many different counties have different systems. So, different ways of recording plus different laws on recording. So that's one barrier to adoption. Another barrier is the speed of the transactions. Blockchains aren't built to handle large-scale transactions. Bitcoin can only process about 3 transactions a second. Ethereum, which is the smart contracts, can do about 15. So you think, okay, well, what can I do to prepare? So my first thought is, well, is my job going to be secure? The answer, no. So I think you probably already picked up on some of the professions that are going to be disrupted. Title companies. So if titles are all on a blockchain, are we really going to need title companies? Title insurance? Probably not. Brokers and agents. I think our roles are going to diminish in 5 to 10 years. Escrow agents. If we have self-executing contracts on a blockchain, the role of the escrow agent is going to be diminished. Lawyers, again, you need lawyers to put the contracts together, but I see their role diminishing, as well as accountants. Data hoarders and monopolies, they're going to be out of business. I see the emerging opportunity to be syndicators. You're always going to need somebody that can put those deals together and tokenize those assets and put them on a blockchain. So what can I do? Get educated, obviously. I really encourage you to join FIBREE, get on the email list, download and read the industry report that's jam-packed with information. Do what I did, watch a ton of YouTube videos, simply search real estate and blockchain, and you'll have plenty to watch. I read a book called Bubble or Revolution. That was pretty informative. A couple of links here, some real scholarly publications that have been put out there for you to review. So there's my info, and there you have it. So Julia, you want to take over the screen again?
Well, that was great, Ken, and thank you so much for that. And it looks like we have some time for questions also. So if you want to type your questions in the chat, I can relay them to Ken. And if you want to unmute yourself, that is also a viable option. So either one is fine. And while we're waiting for questions, it was very thought-provoking, and I certainly came up with some questions of my own, which I will, get the ball rolling here.
Yeah, please.
So you're talking about when air conditioning information, or when the roof was replaced, all that stuff would be on the blockchain. How is that going to get on the blockchain?
So there are different aspects of how real estate is going to be on blockchain. So you have different, I guess, spheres. So land title would be one aspect. So property records would be another type of blockchain. So that would have all the information, like I said, the floor plans, the tenants, the cash flows, the expenses, the information about HVAC and so forth. And then the tokenization of the asset itself. That's the where we're dividing up the ownership of the asset. Does that make sense?
Yeah. And I guess what, I guess anytime there's something of value out there, somebody's going to figure a way to cheat.
Mm-hmm.
How do how do we know that the blockchain will be secure? Is it going to be overseen or regulated?
Yeah. So great question. So if you remember when I was starting to talk about, I showed the 3 pictures with the blocks and then the hash in between. That's a mathematical computation that in order to change a block, all the computers on the blockchain are simultaneously calculating to get to the correct answer. And this is beyond my my understanding, but so if unless you have total agreement from all the computers on the node, every computer on the network, you're not going to get the ability to change any information on there. So you basically have to attack dozens, hundreds, if not thousands of computers all at once in order to change the blockchain.
Okay, sorry, I'm trying. Excellent. So hold on, it looks like we have some more comments in there. Okay, so Julia received an email asking if this will be recorded, and the answer is yes, and we'll be sending this out. Alex Sylvia asked, who's responsible for coding details of contracts, etc., into the blockchain?
That's a great question. I don't know. Won't be me. It's there are companies right now that are working on self-executing contracts for things like escrow, and I would imagine the one thing that that residential real estate has over commercial real estate is standard form contracts. And I could see those being put on a blockchain where you have contracts that are in place that are standard, they're accepted by everybody, nearly everybody that's participating in that market. Like I'm in California, there's the California Association of Realtors, and it's a staggeringly high percentage of residential real estate transactions are done using the CAR forms, California Association of Real Estate forms. So I could see somebody like that, paying the money to implement self-executing contracts. So somebody like CAR would pay these attorneys because they have the forms and then they update them every year. So it'd be a matter of somehow coding those contracts into a blockchain.
So I remember, like, every once in a while you'll see stories in the press about somebody who bought or had either mined or bought Bitcoin early on, loses their key, so that they have $1 million which they can't get to. Is that a potential problem with real estate and blockchain?
I suppose. I don't know. I really don't know the answer to that, David. I mean, I think the people that lost those in the beginning probably thought it was a flash in the pan and probably didn't keep track of their asset.
Uh, yeah, I can't imagine that happening. But and I guess if you're buying, if you're getting the token through somebody like Solid Block or whatever, presumably you'd have some
Mhm.
go back to them and say, hey, can you help me out? As opposed to like the Wild West of what Bitcoin seemed to be in the very beginning. Okay, and then here we have Steve Massell, who says keys are like passwords, and your public key is your wallet address. Uh, and then from Steve Alasky, who would replace market makers to facilitate token sales and pricing?
I think what he's saying, I think there are going to be portals, various portals, kind of like LoopNet, where people can go on, excuse me, kind of like the New York Stock Exchange or NASDAQ, where you'll be able to go on and purchase shares of using tokens. You'll create a wallet, you'll fund the wallet, and then you'll be able to buy tokens of shares in that real estate.
Okay.
And the barriers to entry are going to be so much lower. Right now, you have to be an accredited investor with the old saying, you have to have the money to make the money. Well, I see that barrier coming down with blockchain, that somebody that has $1,000 can put it in their neighborhood shopping center, and it's a lot of syndicators don't want to take small investors, because the more small investors you have, the more difficult it is to manage, because there are that many more investors to get reports out to, et cetera. But if everything's self-executing and all the financials are there, the distributions are done automatically, it's going to be a lot easier to manage that investment.
So we're lucky to have a guy on here, Graham Massell, who's working on a tokenized property, or is tokenizing a property in the Atlanta market. Graham, do you want to unmute yourself and give us a little bit of real-world experience of what the process is like, and what the hoops you've had to jump through, and a little bit of color?
Can you hear me?
Yes, we can. Thanks.
So yeah, my father had mentioned about this webinar to me, and I said, yeah, I'll sit in. So I've been in this space since 2015, both on an investment wise and learning about what blockchain is and this new technology. And just to give some answers to some of the questions, a little bit of background. I'm a fourth generation Atlanta commercial realtor, so the family's been doing the business here in Atlanta since 1915. My biggest goal this year is to do syndications using the blockchain. As somebody who has always wanted to invest in commercial real estate, my goal was, how do I make it to where people can invest, in commercial real estate without having to bite off the whole chunk, right? Mm-hmm. So we've put together a project in Atlanta where we'll be doing a syndication using SEC, securities regulations to do a crowdfunded equity portion among accredited investors. I shouldn't have said crowdfunded, and then a crowdfunded debt portion. So that'll be where the debt will be able to take investment from. I'm hoping to get as low down to $1,000 per token. And to give you an idea, when you're tokenizing an asset, it's like a digital share that you can trade 24/7 internationally on the blockchain. So somebody asked, will there be market makers to facilitate token sales and pricing? There are already market makers who do that. Similar to how you have, an E-Trade account, you'll have another account where it could be to buy token sales of commercial real estate. And I'd be happy to go over those providers in the marketplace. We're working with them as well. I use a specific platform that helps me track the cap table management systems, and will integrate with a couple of blockchains, either Ethereum or Tezos are the ones that I'm looking at. But that will essentially allow me to then take that asset, go through the hold period similar to how the Aspen Resort did, and then eventually investors' shares, similar to how I'll take their information down, just like any other fund would do with an investor, KYC, AML, I'll take their information down. Once we pass that hold period with the securities regulations, we'll then be able to say, all right, investors, you can now tokenize, your investment is now tokenized, and you can go on these different platforms to sell your token. So at that point, they'll be able to go to these third-party market makers, right, and say, and post their token, right, post their share of an asset and sell it for whatever the highest bidder is willing to trade at. There are other third-party validators out there, one of them which that we're working with, that will authenticate and put all of the data points, right, like just as you have an appraiser come out and do an audit, they'll do an audit of all the materials for our investment, and it'll be on a blockchain, so you'll be able to read it publicly and see, if you wanted to invest, how do I know that this guy's telling the truth? Well, all of the information has been audited by a third-party auditing company, everything from the sales price, that the comps reports, right, that another brokerage shop would do, and they compile all of this information, and it's stored on a blockchain. So then when you say, all right, I want to invest in some tokenized real estate, you'll go on and say, all right, I see these different projects that are listed here. I want to check out what they're doing and make sure that they're legit. And you'd be able to then look at their project, just like you look at an offering wall on any Kickstarter or crowd-funded campaign, right, of a similar startup kind of thing. You'd be able to see the pro formas and everything. And then you want to say, all right, well, this is what they're telling me their financials are. I want to really know exactly, the truth, right? And that's where the trust element comes in, is this third party group that has its own auditing team will then have posted all of that assets, investment financials and material documents, everything from lease agreements to whatever you'd need to know. And so me as the investor, I can now check out that, all right, everything that they're saying in terms of their financials are correct, and their actual, leases are legitimate and present. So that gives you an idea, hopefully, to give you a little background on the puzzle is, it's not as simple and easy as creating, an NFT. I don't know if anyone's familiar with that space, but a non-fungible token, they're being used heavily in artwork these days. But similarly, think of it as the same kind of thing. You're going to have a digital representation of a share of an asset.
Oh, this is fantastic.
I don't know if I missed the question.
Yeah, that's
yeah, glad I could hop on. And somebody else asked about coding details on contracts. It's not like the contract itself is going away. There will still be somebody, either a realtor or an attorney, that's using a contract. So while it's a lot easier for these residential to just have simple contracts and you fill in the blanks, you'll still be drawing up a contract, and a lawyer may come in and do the negotiations and the legalese, but the contract will be written and stored right on a blockchain, which essentially states that it is everything a secure between two parties. So it's not like there's a coder that has to code up a contract.
Yeah, huh. That makes sense, I guess. So Graham, I think we need to have another webinar in the future with you telling us about how you take a project from idea to tokenized masterpiece. So
I'd be glad to do so. Our first project, I hope to have offering materials ready come into February.
Ken, you
thanks, Graham. No, I that was great input. I really appreciate it. It's encouraging to see. Graham, let me ask you, since you're actually doing this now, what I give a 5-year horizon before we start really seeing a lot of assets tokenized? What do you think? We're in 10 years for mainstream. What do you think?
Well, I know that there are already funds. The platform that I'm using to do this for our first syndication project here in Atlanta, it's a little different because it's a ghost kitchen concept and there's some operations pieces. But I know that there are already funds for, like one of the other guys that I know well, he's already got an investment fund and he's just turning his fund into a tokenized fund. So the investors will basically trade their existing shares, right, that they have, certificates that say that will now be digitally represented. So that could happen as soon as, 6 months, as soon as he goes through the steps to do that and the securities, steps to do that as well. And similar kind of thing, his fund is office, industrial, hotel. I think they've got a little bit of retail, but he's got $100 million fund that the funds are already there, right?
Yeah.
It's not like he's doing something new. Alternatively, I know a guy who's doing triple net investments in a fund, and it's the same kind of thing where he's raising capital to acquire triple net assets, and then turning around and selling the shares to those investors that are turning their shares into digital tokens, right? It's not like you're going to hold the token. You just have a wallet that holds all your digital tokens and everything you need to represent that you own that share of that asset. And again,
but as far as market acceptance and just the perception, I mean, I mentioned some of the Bitcoin effect, and most people really know nothing about blockchain. And so how long do you think it's going to be before it hits the consciousness of real estate investors that, oh, okay, well, this really is a legitimate alternative to buying an asset?
I think it's probably 3 to 5 years, but you got to also think of, I don't know if you've seen the great transfer of wealth between older generations and younger generations. Younger generations are pretty used to paying for things between Venmo and PayPal, Cash App on their phone directly, and even making investments with things like Robinhood or, many other services. GoFundMe, for example, another way. So I think depending on that level of, ownership and involvement from younger generations in, whoever's into real estate, it could be as soon as 12 months from now because of, how much more active younger generations are getting involved.
Well, and as we all know, real estate is an illiquid asset, and especially in a syndication, if you own a share, typically today's syndication share, you don't have a market other than the other shareholders or members in that syndication. So when you're able to tokenize it and get in and out of deals, like you said earlier in your program, at the same day, drop of a hat, that's going to gain a lot of attention, just the liquidity aspect of it.
Yep.
Yeah, and it's interesting what you say about the sort of the generational difference. I have 4 kids, and both my sons have now bought some cryptocurrencies, and I'm still like, well, I don't really understand it, so should I buy it? They're like, come on, play with it a little bit, So I don't know, maybe I just need to I guess if I were to buy some, I certainly would want to pay more attention to it, and maybe that would force me to really get to understand it better too, sort of like dig in, as long as it's betting with my head, not over it. So
Yeah,
we have
I think I'll just make one last point, if that's okay. As more and more people get into the idea of digital transactions, which has we see how much credit cards have grown. People used to think credit cards was a crazy idea, that I'd walk around with plastic to pay for things. That people today are paying things with their phone with a tap on the payment processing system, left and right. I mean, I'm sure everyone's seen that. So
Well,
just picture.
I use my fax machine. Sorry, I just had to push that in there.
Look, my 89-year-old mom sends money to my kids with Zelle. So if she can do it, I guess I could probably, muster up the courage to buy, some Bitcoin or something. So,
It's not as scary as you think once you start seeing the effects of, I can pay somebody directly without any other, institution, bank, or somebody else in between you.
It's the reduction of the intermediaries. It's like we said earlier.
Correct. And different blockchains do different things entirely, right? There are blockchains out there that exist secure, solely for the privacy aspect, so if you think, and to clarify, Bitcoin is not I don't like when people call it sketchy, because Bitcoin is totally traceable. It's not a private ledger. There are other blockchains that are, wholly private ledgers.
yeah. Well, this is
Cash can be laundered, but Bitcoin cannot.
Huh. Right. And you don't have to worry about, some future, 1 million bit, encryption being cracked, or, as computing gets,
So there are some concerns of quantum computing interacting with a ledger. We don't have any, reason to be scared, though, because quantum computing isn't going to happen overnight, and the quantum computing aspect of them hacking into a ledger is still about having control of the ledger, right? If we remember that from a few slides ago, it was talking about what makes up the ledger is these nodes. Well, there are different mining pools all over the world that are these nodes, right? So right now, the top miners are anyone from, China has a bunch of facilities. There's a bunch of them in the United States. In some, there are a bunch of them popping up in South America, because, for them, electricity was included basically for free. So they could set up all these different mining rigs. I think it's that slide you just scrolled through. But to give you an idea, yes, that one. So, right, there's all these different mining operations that support the network to say that the ledger is immutable, right? So that every transaction between party A and B and D and F are legitimate, and it's tracked based off of, all right, this is real because it's secured by these hashes and the mining that takes place. So, right, in South America, where electricity was free, they were able to set up mining operations and mine for a while there until their government came and shut them down. Right now, China has a big mining operations facility. There's a couple of, like I said, starting up left and right in the United States. And back when the computer processing power was very slim, you could mine with your laptop in your basement. Today, the amount of computer processing power it takes, you're not going to be mining. The amount of electricity it'll cost you to mine 1 Bitcoin, it would take you forever on your laptop, and you'd be spending an arm and a leg on power. So, think of it that way, in the sense of, oh, well, what's going to disrupt this? Well, yeah, that might be for Bitcoin, but, there's other blockchains that your digital token would be represented for your real estate. So it's not like they're going to be able to just take your real estate ownership away from you if they were to hack in, right? So that idea of somebody hacking a blockchain to then take your digital tokenized asset, right, of a real world real estate, that's not going to happen.
Got
it. If that's what you were asking me, I think so.
Yeah, no, that's great. Really appreciate it. Well, look, it's a little after 4 here, and I want to be respectful of everybody's time. Thank you, and Graham, I'll be in touch because we'd love to have you, continue to share your knowledge. Ken, this was incredible. I feel like
Great.
finally beginning to understand the importance of blockchain in real estate, and I really owe that to you.
Thank you.
And so again, if you want to get in touch with Ken, his contact information is here. It's ken.rhinehart@svn.com, or you can call him at 626-922-2256. And Graham was kind enough to share his contact info, and he's Graham, Graham, at massell.com, massell.com, and his phone number is 404-255-6810. Can't wait to keep this conversation going in a future webinar. I'll be in touch. All right, and thank you, everybody.
Thank you.
And
Thanks.
okay, and I'm going to stop recording. Okay.